I really prefer scalping Bitcoin US dollar on the 15-minute time frame. Anything lower than that and you will have these candlesticks over here. This is an example of the 1-minute time frame. And this looks like a mess and I cannot really understand a lot what's going on. However, the 15-minute time frame has nice candlestick price action which we can understand, analyze properly and have good entry positions. Now, since it's my favorite way to scalp, we're going to use the moving averages. The 20 and 50 moving averages are my favorite, so let's add them to the chart. Go inside indicators tab, type in moving average, under technicals, moving average updated, double click on it. Go inside the settings icon and change the moving averages from length 9 to 20, and it's the same process with the other moving average. The only thing that's changed is the length from 9 to 50. We will also go to style and change the thickness of moving averages so you can see them much clearer. Now you will have these two lines on your screen. The only thing we will need now is a MACD indicator. So type in MACD, moving average convergence divergence, click one time and close this screen. Okay, so now we have a nice chart, Bitcoin US dollar 15-minute time frame. We have the two indicators, the 20 and 50 moving averages and the MACD indicator as well. Now let's try to analyze and find sense what's going on. So we had this nice trend line towards the downside, right? We can see the market has been heading towards the downside. We can see the lower lows and the higher lows as well. We can see this, and the market has been bouncing towards the upside and the downside very efficiently. However, we have a signal from the MACD indicator. This is the first signal over here. The blue line is getting crossed with the orange line, which generally means bullish pressure is coming, buyers are in the market. And we can see over here with the histogram of the MACD indicator is green, which shows bullish pressure as well. However, we also have contradictive moving averages. We have the 20 over here and 50 over here. Usually they act as a form of resistance and very likely would be a nice push towards the downside once again to retest the previous bottom, right? This is a logical scenario, but since we are using MACD as well, and it's showing us that buying pressure is incoming. So really, to enter the trade short, we would have to wait for another crossover over here and start seeing the histogram being red as well. That's the only way we could start seeing some selling pressure. We are seeing a bearish engulfing candle over here, but we know that the MACD is telling us it's a buy. So we need to wait for both indicators, the MACD and the moving averages, to be on the same side. Whether we are buying or selling, it doesn't matter. We want them both to agree with each other. So let's just play the tool and see what actually happens. So it goes towards the downside, the upside, and boom. That's the first break of the 50 moving average. Once we get this break over here, this trend line no longer exists. We need to find another trend line. So we can see that this area zone is pretty good because every time the market pushed, it made new higher high, and a breakthrough over here. And we can see the same scenario that we did just towards the upside. We also see that the market is now in favor of bulls because MACD is crossing the histogram bars and also has crossed the blue and orange line. We also have the 20 and 50 moving average cross. Now all we need is a bullish engulfing candle to enter the trade long for a good and valuable buy-in position. So let's just play the tool, see what's going on. It crossed again towards the downside, but we had a push towards the upside. But if we have a look at the MACD indicator just over here, we never had the blue line cross the orange line. So we are still on a trending market. So this shouldn't scare us at the moment. We can just adjust the trend line just like this, and it would be a nice fake out in a sense. So let's play the tool again, see what's going on. Boom, it shoots towards the upside. And this is where you could potentially enter your first trading opportunity. As you can see, bullish engulfing candlestick. Again, we can mark the previous area of sensitivity just over here, right? So we had a nice squeeze pattern. We had this area zone over here that was trending down, right? We had this resistance over here. Look at this, boom, shooting towards the upside, squeeze pattern. Like a champagne bottle, it pops and shoots towards the upside. Now, what also happened is we had a push and we had an exhaustion. Look at this candlestick over here. Nice wick towards the downside, touching the previous area of sensitivity, which became support. And after that, we had a nice bullish engulfing candlestick. This could be a great trade towards the upside. We would long this position just off this candlestick over here. And we would really want to have stop loss big enough just to go under all the moving averages. So 45887 seems pretty good. We can do the same thing for the take profit level. So 1-to-1 risk to reward at the moment. And it probably would have been a nice trading opportunity. However, very likely if you would have been a little bit more patient, just over here, after a push, there's usually a consolidation a period before it continues to move up. So in that consolidation, when the market is moving in between two area zones, usually the moving averages catch up, and this is a thing that you want to look out for. So maybe you don't want to enter here, although it's good and there's nothing wrong with it. You might want to find a better risk to reward ratio. So let's just see what happens. It goes towards the downside a little bit, goes up. We're still in the market. We are waiting for another bullish engulfing candlestick. And there we go. We have one just over here. Another bullish engulfing candlestick. As you can see, in this case, the moving averages are still inside. It could have been a nice trading opportunity just over here. Maybe not too much better, but we also have a confirmation that the market is trending up since it's making new higher highs as well. And since we have a nice bounce of the 20 moving average, which another bullish engulfing candlestick very likely is going to continue shooting up. So let's see what will happen. The market is also attempting to break the MACD moving averages, as you can see over here. But will it? Let's see what happens. And it slightly tried to, and it did not. It shot towards the upside nicely. Now, once it reaches your first take profit low, you can be safe and move your stop loss to entry position to not lose anything at all, even if the market, let's say, decides to drop down. If you keep this trade running, that is, then it would have been break even. However, you probably would have closed 50% over here and then kept the trade running to maximize your pip gain, right? So let's see what will happen. Whether we are shooting towards the upside or not, it pulls back a little bit. Are we getting a nice push towards the upside? Yes, we are. Look at this. A nice bullish engulfing candlestick. Once again, this could be another entry position for you guys. So let's say you close 50%. Maybe you're still keeping this trade open. So obviously it reached even more pips just over here, at least double. So basically your 1-to-1 risk to reward ratio would have become, nearly 2-to-1. That's pretty good. But you could open another trade just over here. Same thing, bullish engulfing candle, a nice bounce of the 20 moving average, showing bullish pressure is here. Bullish pressure confirmation, boom, boom. It's gonna probably, retest this zone, very likely that is. Let's see what happens. Stop loss just below over here. 45,000 and 45,000 as well. We would still be running this trade as well. So let's say it would have been, just over here somewhere. That's the maximum. We're still making money. Let's see what happens. Pushes down. Will we get closed out? Boom. This one closes out. So we have 50% over here, right? We have 50% with this trade. We close it off. We forget about it. Let's see what happens with this one. So boom. Shoots towards the upside just about over here. That's why you need the stop loss to be just below the moving averages, quite a bit. As you can see, previous area sensitivity was quite far away. We had a nice M formation over here, which is a bearish formation, which shows that bearish pressure very likely is coming in. So if you see this M pattern, very likely bearish pressure is coming in. We had this breakout over here. That could have been, a scary scenario. Maybe some people would have even closed it over here. Since we had the MACD indicator showing red bars, it was crossed, 50 moving average cross. Generally, you would have closed off your trade over here. But what I usually say, if you analyzed it properly and you have confidence in your trade, you should keep it open until it reaches your stop loss or take profit. In this case, it definitely reached our take profit low and it shot towards the upside. Typical Bitcoin maneuver. So as you can see, this could have been your profit, 4.84 risk to reward ratio. That's pretty damn good for me, and it probably is for you as well. So that's really important. Always have your stop loss below the moving averages. That's why it's so important to have a good entry position. Let's say over here we had a nice entry position. It shot towards the upside, nearly reached our take profit level, which we initially had. went towards the downside, nearly reached our stop loss, and then boom, shot towards the upside where the money would have been made. So look at this MACD. We are trending towards the upside, blue and orange line over here, histogram column showing green. Very likely a nice trade towards the upside. And we can see the same scenario just over here with the two moving averages, right? The 20 and 50 moving averages. Usually the candlesticks bounce in between the 20 and 50 moving averages, so I expect a move towards the upside. We did get a bullish engulfing candlestick once again. This is the previous high, so very likely a nice trade towards the upside. Since the market has pulled back a little bit, gives us a better risk to reward ratio. So take profit just over here somewhere, maybe 1.5, 1.5, and stop loss. That's pretty damn good actually, because it's below the 50 moving average. And as you can see, this would have been a great trade towards the upside. I just placed a few moments ago, currently $76 in profit. I don't have any stop loss or take profit loss since I'm scalping, and I will probably close off very soon. So after some time, there's the results, went towards the upside nicely.